Okay, so hello everyone, and welcome back to yet another accounting session, financial accounting. Okay, so in the last session, we were onto our depreciation part. Okay, and we have completed our straight line method or fixed installment method. Correct. The sums which you all have done are correct. Okay, none of them is wrong. Okay, so before we start, okay, there are few more terms which has to be discussed by me. Okay, now. If you all remember, then I have said that in the last session as well, that depreciation is calculated. Depreciation is calculated as per AS10. Okay, right now I'm not going to discuss AS10 right now. Okay, whenever we'll be doing our accounting standard session, at that time I'll discuss separately as per AS10. Okay, things are same, only the few terms are there. Extra will be there. Okay, now there is a term known as depreciable value and depreciable life. Okay, so actually the thing is like this: depreciation is always charged on depreciable value for depreciable life. Okay, the statement is like this. So what actually is a depreciable value? Depreciable value is nothing. We already have calculated, that is cost of machinery minus estimated scrap value. Correct. We learned this in the last session only, but I forgot that one. Okay, but after that, I remembered that this word should be introduced with you all. Correct. So I'm just giving those name, but you know actually correct. From cost, scrap value has to be deducted. Okay, and depreciable life is what? Depreciable life is nothing but estimated economic life of asset. Okay. This is all we know, correct? We have discussed this in the last session. It is just that I haven't used these terms, correct? So if sometime question comes like this, okay, then you might get confused that what actually those are. Okay, and one more thing, which that also I missed. Depreciation. Uh, we know depreciation is charged on depreciable assets. Correct. Now, what actually are depreciable assets? Okay. My question is, what actually is a depreciable asset? So your answer will be, sir, fixed asset or tangible asset. Correct. So you can say all fixed asset. Correct. All fixed assets, but all fixed asset except, okay, all fixed assets except land. Okay. Okay. So we just started. So we are discussing, there are few words, terms, okay, which I forgot to discuss in the last session. Okay, so I was just discussing them. So actually depreciation is charged on depreciable asset on depreciable value, okay, for depreciable life. Correct. So depreciable value is nothing, is the cost of the machinery minus scrap value. Okay, we learned this in the last session only, but I forgot to use the terms. Okay, so I'm just using it right now. And depreciable life is nothing but the estimated economic life of the asset. Correct. We say now that useful life is 5 years, 6 years, 10 years, 15 years. Okay, depends upon the situation and the condition, how it is being used. Correct. So that is depreciable life. Now we know depreciation is charged on depreciable assets. Correct. Now, if I ask you what actually is a depreciable asset, you will say that, sir, all fixed asset. Correct. Correct. All fixed asset, but except land. Okay. But remember, if I go in more detail, land also can be of two types. One is freehold land and one is leasehold land. Okay, freehold land and leasehold land. Okay, if question comes like this, then remember freehold land is what you are the owner of it, so no depreciation, no depreciation. But for leasehold land, depreciation is there. Okay. If I further calculate it, so it will be it. Correct. So these are the terms which were used to be discussed in the last session. So I just discussed it that depreciable assets are all fixed assets, okay, except land. But if I go in further detail, then land also have two kinds. Okay. One is freehold land and one is leasehold land. For freehold land, there is no depreciation, but for leasehold land, depreciation is there. Okay, actually the economic life till which it is going to give me benefit. For leasehold land, we can depreciation is calculated. Okay, I don't hope this such deep questions do form, but okay, when it is there, when we know, then we should always discuss. Okay. Now, straight line method is done in the last session. Okay. And whatever you guys have done, all are correct. Okay. Nothing was wrong over there. So that gives me a confidence that you are good in depreciation. Okay. In fact, I didn't expected that you will prepare machinery account and all, but yes, you have done that also. So that is good. Okay. So now we are going to discuss written down value method, or it is known as reducing or diminishing balance method. Okay. What actually happens over here that we know that if I have to write it here also, fixed rate of fixed rate of depreciation is charged on the cost of, or let me say cost of asset. Okay. Or let me write like this: charged on the original cost for the first year only. Okay, for the first year. Okay, but in subsequent year, it is calculated on written down value, which gradually decreases during the working life of assets. Correct. I think this was known by all. Correct. There's nothing new that I have discussed till you. Okay. So WDV is what the basic differentiation between the straight line and WDV. Okay, is that their fixed rate of depreciation, fixed depreciation is there because it is always charged on the original cost of asset. Correct. But here for the first year it's charged on the original cost, but for the subsequent year it is always calculated on the written down value, which gradually decreases during the working life. Okay. So what I can say that amount of depreciation is not fixed, or I can say that it, or I can say amount of depreciation gradually decreases. Correct. Now let's understand that what actually is it is talking about. Let understand this with the help of an illustration. Correct. Now suppose cost of machinery is say 2 lakh. Okay. Installation cost, say it's 20,000. Okay. Say rate of depreciation, I'll keep it simple for calculation, is 10% per annum. Okay. And scrap value will be, say, for an example, it will be 10,000. Correct. Say useful life is, okay, just for better calculation, we'll say useful or estimated life is 4 years. Okay, so we need to do what we need to do. Calculate depreciation. Those who want to try can start doing this. Okay. Now suppose the machinery, I'm just writing a date so that, so machinery was purchased in, say, for example, 2050. Okay. Let me write like this. It was purchased on 1st of Jan 2050. Okay, so that we get that numbers. Okay, so for the year, so I'll start the solution. So for 2015, okay, I'm just showing the calculations right now. We'll do just the calculations. Okay, so for 2015, that is first year. Okay. Amount of depreciation will be equal to, what will be the amount of depreciation? How to write it? Cost of machinery into, or okay, we'll write like this, will be depreciable value into rate of depreciation. Correct? Is there anything wrong in it? Okay. So what will be the depreciable value over here? It will be 2 lakh plus 20,000 minus 10,000, the scrap value. Correct? What is the rate of depreciation? It's 10%. So what is the amount of depreciation coming? 2 lakh 10 into 10%, 21,000. Correct? Correct me if I'm wrong. Okay. And okay, so here at first, let's try to at first cost of machinery. Okay. What it will be? 2 lakh plus 20,000 is 2 lakh 20,000. Okay. So we'll write it like this over here. 2 lakh 20,000 minus 10,000, that is the scrap value, into rate of depreciation. So for first year, this is the depreciation. This is the amount of depreciation. Okay. Now what we have to do, this is the only change. We have to calculate WDV, okay, or we call it closing balance. So what it will be? Can anyone help me out? Two lakh 20,000 minus 21,000, correct? So 1,99,000. So this is the WDV for the next year. Okay. Now for 2016, which is second year. Okay. So for this, the WDV is 1,99,000. Okay, this is the only difference. Now we'll not calculate the depreciation on this cost of machinery. Okay, we'll always be calculating on this written down value or the closing value for the next year. Okay, remember what I have written over here. It is WDV for the next year. Okay, not the closing balance for the next year. Okay, these words are associated with. Let me do one thing. WDV or closing balance. Okay, so WDV is this. So what will be the amount of depreciation? Amount of depreciation will be depreciable value or WDV into rate of depreciation. Correct. 1,99,000 into 10%. Correct. So what it will be? 19,900. 19,900. Correct. Now what will be the WDV for next year? WDV for the next year will be 1,99,000 minus 19,900 will be 1,79,100. Okay. Okay. For 2017, that is third year. Okay. I'm just writing it right now. Okay. Amount of depreciation will be on this WDV. Okay. It will be calculated on this WDV. So it is 1,79,100 into 10%. It will be 17,910. Correct. So what will be the WDV for the next year? It will be 1,79,100 minus 17,910. It will be 161190. Okay, so this will be the WDV for the next year. Okay, now for 15, 16, 17. So for 2018, what it will be? It will go on like this. Okay, fourth year, amount of depreciation will be equal to 161190 into 10%. Okay, because I took imaginary figure. Okay, that's why it's coming like this. 161190. Now what will be the WDV for the next year? One four five zero seven one. Okay. Similarly, it will go on like this. Which one, Alan? 1,89,000. Are you saying this one? 1,89,000, 2016. No, no. It will be 199. 2,20,000. Okay. Minus 21. Because it is 2,10,000. See, what actually is happening? We are reducing the scrap value to calculate the depreciable value, correct? So to 2,10,000. Now 2,10,000 into 10% is 21,000. Okay. Now from the cost, that is 2,20,000, we have to deduct this depreciable value. Okay. So it will come 199. Now the calculation will be 199. Then it comes to 179, 100. Calculation will be on this. Now came 161190. So calculation will be on this. Okay. Okay. So I think this was simple and yet clear to everyone. Correct. Alan, I think your doubt is solved, correct? You got how the calculations are done, correct? Now, scrap value will only be deducted once, na, Alan? Not every year. Every year you'll sell and get the value. It will only be done at a once. It will only be done at a once in a life, that is in the first year. Well, we'll start the calculation na, on cost of machinery installation is added, and on depreciable value, that scrap value is deducted. Only once, not every year. Okay. Now, okay. Okay. So we'll go on to illustration 20 of your mat, of our mat. Okay. And we'll see that illustration once so that this is clear to us. 19, I'm coming. I'll need to explain that. Okay. Let's read the question. On 1st of January 2011, machinery was purchased for 80,000. Okay. On 1st of June 2012, additions were made to the account of 40,000. Okay. On 31st 3 2013, machinery purchased this machinery. Okay. Costing 12,000 was sold for 11,000. Okay. And on 30 June 2013, machinery purchased, okay, on machinery costing was sold for 26,700. Okay. So on 30th of June, this was sold. Okay. Now again, a machinery on 1st of Jan 2014, costing 32,000, was sold for 26,700. Okay. Now on 1st of 10 2013, additions were made on the amount of 20,000. Depreciation is 10%, diminishing balance. Okay. Show machinery account 2011 to 2013. Okay. Year ended 31st December. Okay. Means 1st Jan to 31st December. Okay. That actually has to be done. So let's do one thing. Now. Let's solve this question. Correct. It's better if we solve this. Give me a second. I need a fresh page. I think the question is visible, correct? Question is visible to everyone, correct? Okay. So now we'll start solving this. Okay, we need to show machinery accounts. Okay, but to show machinery accounts, okay, in the book, what they have done at first, they have shown the statement. Okay, so what we'll do, we'll not go by the statement. Okay, so at first we'll directly try to do it from machinery account. Okay, let's see if we face any problem, then we'll move on to the statement. So a machinery account for 3 years will be there. Okay, so let me draw an account. Just give me a second. So I'll draw a machinery account. For 3 years it is, correct. So I might need some more space. Okay, let's do one thing. It will be date, then it will be particulars, then here will be amount. Okay, then again date will be there, then particulars will be there, and then there will be amount. Okay, I've just drawn it in a rough way. Now whenever we'll need, we'll increase the. Okay, so what we are doing, we are preparing machinery account. Machinery account. Here it is, date, state, here it is, particulars, amount, date, particulars, amount. Okay. So what was the first date? On 1st of Jan 2011, correct? So on 1st of Jan 2011, a machinery was purchased. Correct. And when machinery is purchased, how it will be shown in the machinery account? To bank account. Correct. What is the amount? 80,000. Correct. Now we need to find out, has anything else has happened in this year? Now see, the next date only starts in the next year. Correct. So nothing has happened. So on 31st 12 2011, what will be done? A depreciation will be charged by depreciation account. How the depreciation? It is a diminishing balance, no matter, but it is the first year, correct? So I'll show the calculations over here only. It will be 80,000 into 10%. So it will be 8,000. And what will be the rest? Okay, if anyone finds that I'm doing some mistake, okay, stop me then and there. So it will be by balance CD. So 8,000, 80,000, so 72,000. Correct. Now we'll close the account for this year. Okay, now we'll move on to the next year. Okay, it has the same date. So the next date will be 1st of Jan 2012. Correct. So the opening balance will be to balance BD 72,000. Now see, on 1st of July, addition were made amount of 40,000. That means additional machinery has been introduced. Correct. On what date? On 1st of July 2012 to bank account of 40,000. Correct. Anything more on now in the next year something is so nothing more has been done. So let's do one thing. Let's go to 31st 12 12. Here it will be by depreciation account. Okay. Here calculations are needed. So what we'll do, we'll write working note 1. Okay. Now go below, start working notes. Okay. So number 1, calculation of depreciation for the year 2012. Correct. Now see, there is one machinery which is there for the whole year. Correct. There is one machinery which is there for the whole year. Correct. So what will happen for that whole year machinery? Full depreciation will be provided. Correct. So for machinery 1, okay, let's do one thing. For bank, let's name it M1 and let's name it M2. Okay. So for M1, okay. So for M1, amount of depreciation will be very simple. Correct. Amount of depreciation will be 72,000 into 10%. Yes, you guys agree or not? So it will be 7,200. Correct. But for M2, what will be amount of depreciation? 40,000 is the cost, 10% is the depreciation, but it is there in our book for how many months? It came in the month of July. So July, August, September, October, November, and December. Correct? So it is there for the 6 months. So half depreciation will be there. Correct. Into, let's do like this, 6 by 12. That means half. That means 2,000. 4,000 will be full, half will be 2,000. Correct? So total depreciation will be 9,200. Yes, you all agree? Okay, so how much amount will go in the depreciation column? 9,200. Now what will be by balance CD? What it will come? 70 to 14. So 1,12,000. Sorry, take 1,200. 1,000. Sorry, 1,12,000. 9,200 means 2,800. Correct. 1,02,800. Correct. This much is agreed by you all. I hope so. Correct. I will move on to year 3. Okay. Now I will move on to year 3. Now I will see that in year 3 there are some sale, there are some purchase. Okay. Let's first read it. So on 31st 3 2013, machinery purchased on 1st of 7 2012 costing 12,000 was sold for 11,000. It was of 12,000, but it is sold for 11,000, correct? That means there is some loss on sale, correct? So first what you have to do, first we'll start writing it. So our date will be now 1st of Jan 2013. Okay, it will be 2 balance BD 1,02,800. Okay, and there will be one column for 31st 3 2030. So what first we have to do? So some sale is being happening, correct? It is sold for 11,000. So that means buy bank, that is sale. How much amount? 11,000. But how much it costed to you? It was costing rupees 12,000. That means 1,000 is the loss, correct? So what you can do, buy profit and loss account, that is loss on sale, will be 1,000 plus depreciation will also be there for that, correct? By depreciation account will also be something. Okay, so what we'll write here, working note 2. Okay, so we'll do 2. So we are doing the calculations for M2, correct? So for M2, what was the WDV? See, it was costed 40,000, correct? 2,000 was depreciation. So WDV was 38,000, correct? So what will be the amount of depreciation? It will be 38,000 into 10% into, it is sold on 31st March. So 3 months. So only for 3 months we'll get the depreciation. So it will be 38,000 into 10% into 3 divided by 12. I'm sorry. I went a bit wrong. Okay, I went a bit wrong. Okay, this profit and loss will also be not there. Okay, so what we have to do actually? Now see, what is being sold? Okay, at first I'll write it, then we'll discuss. What is being sold is M2. Okay, so let's assume it at a very first. Just give me a second. Let me read it once. Some addition were on 1st of July 2012. Additions are made amounting to 40,000. 31st 3 machinery purchased on 7 costing 12,000 was sold for 11,000. Okay. Okay. So what was the cost of machinery? It was rupees 40,000. Okay. It was costing rupees 40,000. See, there are two ways of doing it. Okay. One was the way, okay, that we discussed actually it should be. Okay. But when they're saying that the value left was only of 12,000, okay. Now you can imagine just within 6 months and means 3 months, means 9 months, how can a 40,000 machinery can go into 12,000 value? Correct. Just within a span of 9 months, okay, how actually it can go from 40,000 to 12,000. Correct. If you do the depreciation also, because machinery only has a wear and tear in it. Correct. So if you only do the 10% of depreciation also, and that was only also for 6 months. So what actually it was coming to be? It was coming to be 2,000, I think, correct? So 2,000. So at the beginning of the year, the value remained 38,000. So within 3 months, how it can go to 12,000? Okay. There is one method, but I'm not very sure whether you'll get it right now or not. Okay, let's do one thing now. For the time being now, let's do it in the same way. Okay. Once I'll explain you one more method, then we can go with that. Okay. So we'll do it. We'll keep 1,000 as the loss. Okay. And what we calculated into 10% into 3 by 12, it came to 950, correct? 10% into 3 divided by 12. It will 950. Okay. So 950 was depreciation. Is coming for this machinery. Okay. And on 30th, okay, 31st of June, machinery purchased on 1/1/2014. Yeah. There is some mistake in the question. Okay. Now see, it is only for 11 to 13. How machinery purchased on 1st of Jan 2014 came over here? So what actually shall be done is that let's make this what to make it? We just did June 1, okay? July 1, April, okay? April. So correct. So let's make it 1 1 sorry 1/5 2013. Okay, make it 1/5 2030. So what actually it is in the May? Correct. So what actually is happening? Okay, so on 30th of June 2013, a machinery purchased on 1st of May 2013, costing 32,000, was sold for 26,700. Okay, we have made it into our figures. So what we have to do first, we have to first route purchase on 1st of May 2013. 1st of May 2013, purchase was made. So bank account debit, it was purchased for 32,000. Correct. Now the same machinery is being sold on 36 2013. 36 2013. Okay, so sale is happening by bank. Okay, sale is for 26,700. 26,700. So definitely some loss is there. So loss on sale will be 32 minus 26. 32,000 minus 26,700. So it's coming 5,300. 5,300 is the loss. Okay, now we can read the questions. I think. Okay, and on 1st of October 2013, additions were made to the amount of 20,000. Again, some addition has been made. Okay. 1st of October 2013. So bank account, addition of how much? 20,000. 20,000. So on 31st 12 2013, there will be some depreciation, correct? Now see, for M1 is still there, correct? M1 is still there. Okay. M2 is being sold over here. Okay. I'll write M2 over here. Okay. Then M3 came and it was again sold. Correct. But M4 is still there. Correct. M4 is still there. So it will be by depreciation account. I have to write working note 3. Okay. So calculation of depreciation. Okay. There are two machinery, M1 and M1 and M4. Correct. So for M1, see, 72,000 was the cost, I think. Okay, no, 80,000 was the cost. Then 8,000 was depreciated. 72,000 was left. Okay. Now from 72,000, 7,200 has been depreciated. Correct. So what is the WDV? It will be 72,000 minus 7,200, whatever will come, 10% will be there because it is there for the whole year. Correct. So 72,000 minus 7,200 is 64,800 into 10% is 6,480. 6,480. Correct. And for M4, okay, the cost is 20,000. Rate of depreciation is 10%, but it came in the month of October. So October, November, December, only 3 months it was there in the book. Okay. 20,000 into 10% into 3 divided by 12. So it is coming to be 500. So 500 plus 6,480. It's coming to be 6,980. Okay, so this is the total depreciation. 6,980. So it will come to 6,980. Okay, now if we add it, so what it will come? 1,02,800 plus 32,000 plus 20,000. It's 154,800. It will be 154,800. Okay. Minus 11,000 minus 1,000 minus 950 minus 26700 minus 5300 minus 6,980. So here it will be Y balance CD 102870 on the same date. Okay. So what actually we have done, we have just changed the question a bit. Okay. The change has happened over here. Okay. So I'll write it in the product. We have made it 1. This is too bold. 1, 5, 2013. Okay. Otherwise, imagine we are doing a machinery account from 2011 to 2013. Okay. How can a machinery purchased on 1/1/2014 can come into the picture? Okay. So this will happen. Okay. At many places, we'll find that question is okay. What actually it is trying to say, no one can depict. Okay. So you have to mend it a bit as per our requirement. Okay. So this notes will be given to you. Okay. So you follow the question for here. Okay. Now we'll see another method of depreciation. Give me a second. Okay. So let's move ahead. Now see actually what has been done in the book. is completely as per AS10. Okay. But since I have not gone into AS10, okay, that's why I have amended a question bit and I have solved as per the easy way. Okay. This is the only illustration 20 is there, which you will find it a bit different. After that, whatever illustrations is there in the book, that's very simple to be solved. Okay. Once we do the AS10, I promise I'll come back to this illustration 20 and will explain you what actually they have done in the book and why they have done it. Okay. And now we'll discuss another method, which is sum of units method. Okay, it is nothing, it is very simple. It says that depreciation for the period is equal to production during the year divided by estimated total production into cost of asset. Okay, cost of asset. This is simple one. Okay, let me build an example so that you can understand it. Suppose cost of machine, say for example, it's 40,000. Sorry, 40 lakh. Okay. Estimated life, say for example, 10 years. Okay. Scrap value is rupees 2 lakh. Okay. Now something more will come over here in details. It is estimated production of the machine. Production of the machine. Say for example is 2 lakh units. Okay, so this machine during its whole lifetime, that is estimated to be 10 years, will produce 2 lakh units, is all that it means. Okay, now suppose for an example, for first year, okay, 30,000 units have been prepared. Okay, or let's not do one first year, let's do from first to second year. Okay, from 3 to 6 year, say for example, 20,000 has been produced. For 7 to 10 years, okay, 25,000 units. Okay, this is units per year. Units per year. Units per. Now you have to, the question is calculate the amount of depreciation for each year by applying sum of the units method. Okay, so we'll solve it. Okay, so depreciation for first to second year will be what? What is the formula? Formula is production during the year by estimated total production into cost of machine. Now, see production during the year. For the first year, what was the production? First and second year, 30,000. Correct. So 30,000. What was the estimated total production? It's 2 lakh units. And what is the cost of the machinery? It's 40 lakh minus 2 lakh, the scrap value. Correct. So it will be 40 lakh minus 2 lakh. So what it will come? It will come to 30,000 divided by 2 lakh into 38 lakh. So it will come to 5,70,000 is the amount of depreciation available in the first year. Okay. Now, if I go to year 2, depreciation for 3 to 6 years. So it will be how much units have been produced? 20,000. Correct. What is the estimated production? 2 lakh units. And what is the cost? It is 38 lakh. So what it will be? 20,000 divided by 2 lakh into 38 lakh. So it's coming to be 3,80,000. Okay. And for 7 to 10 years, depreciation for 7 to 10 years, units produced is 25,000 per year. Correct. 25,000 per year by 2 lakh into 38 lakh. So 25,000 divided by 2 lakh into 38 lakh. So it's coming to be 4,75,000. Okay, that's what is all to be done. So for the first year, the depreciation is 5,70,000. For second year, the depreciation will be 3,80,000. Okay, and for the third year, the depreciation will be 4,75,000. Okay, that's all is there, and okay, nothing more than that is there in your book. Okay, but when we'll read AS10, we'll read one more method. Okay, which we'll see as the time will come. Okay, so if I now move on to the book, then you will see that there is a similar example in the illustration 19. Okay, so do this. Okay. This provision for depreciation, I'm coming to that. Okay, disposal of an asset, I'll come to that. Okay, let's do those. After that, we'll come to this illustration 21. And that will end our chapter of depreciation. Okay. So now we are going to discuss something related to provision for depreciation. Provision for depreciation. Okay. Now, in simple words, what actually it is nothing but it is the collected value of all depreciation. Okay. So what actually happens when we try to when we create provision for depreciation? So what actually will happen? Okay, I'm showing you with an example. Okay, I'm showing you with an example. So this is what, this is our machinery account. This is our machinery account, and this is our provision for depreciation account. See, nothing will be changed. Okay. Now, suppose for an example, machinery was purchased for bank account, purchased for 2 lakh rupees. Okay. Depreciation rate is 10%. Correct. So first year, what will be the depreciation? 20,000. Now, what actually we used to do? We used to write by depreciation. Correct. So that will be 2 lakh into 10%. And we used to write 20,000. And we used to write by balance CD of 1,80,000. Correct. And we'll close the account at 2 lakh and 2 lakh. Correct. This is what we used to do. What will change over here is that only this much, that this depreciation will not be reflected in the machinery account. So where it will reflect? This will reflect in the provision for depreciation account. That's it. This will be the only change. The depreciation will not be reflected in your machinery account, because what it says, that provision for depreciation account is nothing. It is the collected value of all depreciation. That means only depreciations will be transferred to provision for depreciation account. So what will happen? Now this by balance CD will be very simple. It will be as it is. So it will be 2 lakh only. Okay. And this will close at 2 lakh. Okay. This will be closing at 2 lakh. And this depreciation is by, so this is for the end of the year. And similarly, there will be to balance CD, this 20,000 will be there. And this account will be closing at 20,000. Correct. Now you go to the second year. Okay. Now you go to the second year. So again, it will be 2 lakh only. Correct. So for the straight line, it will remain same 2 lakh, 2 lakh, 2 lakh, and 20,000, 20,000, 20,000. Only for diminishing, there will be some certain changes, which we'll see as we move on to discuss the diminishing. Okay. So this is the only change that has to be done. That depreciation, whatever you used to write by depreciation, will be transferred to provision for depreciation account. Okay. When we'll do one illustration, we'll get this in a more better way. But in relation to provision for depreciation, okay, what actually has to be informed is that, now suppose if there is any disposal of an asset. Disposal of an asset. Then what will happen? Then certain general entries has to be remembered. Okay. So what actually it is? First of all, let's write this. When an asset, when an asset is sold, okay, because of obsolescence or inadequacy. Inadequacy. Then the cost of the asset is transferred to separate account known as asset disposal account. That's it. Okay. So for these, certain general entries are there. Now see, suppose one of your asset has become, what I mean to say, has become obsolete. Okay. Or you are selling it off, any reason. So what actually you have to transfer the cost to the disposal account. So how will you transfer? So how will you transfer transfer of cost of asset? What will happen on transfer of cost of asset? You will write asset disposal account debit to asset account. Correct? Because what actually you are doing? So suppose if there is a machinery account, okay, and the cost is 20,000, and you are transferring it to asset disposal account. Correct? So you'll debit it to whatever, to machinery account. Correct? You're just transferring this to asset disposal account. That's all what is happening. Okay. Now on this asset, whenever depreciation will be provided, depreciation provided. Now we know that whenever provision for depreciation account is there, it will move to provision for depreciation account only. So we can say the entry will be provision for dep account debit to asset disposal, to asset disposal account. Okay, by entries it might be there that you might get confused, but once we see an illustration, it will be clear. Okay, so let's do one thing. Let's see example quickly. See, illustration 21. Ace and company purchased a machine for 1 lakh on 1st of Jan 2011. Another machine costing 1,50,000 was purchased on 1st of July 2012, that is in the next year. And on 31st 12 2013, machinery purchase on this machinery was sold for 50,000. The company provides depreciation at the rate of 15% on straight line method. Okay. The company closes its accounts on 31st December every year, prepare machinery account, machinery disposal account, and provision for depreciation account. Correct. So there will be only one place where the machinery disposal account will come to the place. Correct. Now, if you move on to the machinery account, so at first, what has happened? It has purchased an asset for 1 lakh. So to bank account 1 lakh. Correct. Now depreciation is 15%. Correct. So 1 lakh into 15% will be 15,000. Correct. But where this 15,000 will go? This will go to, because provision for depreciation account is there. Correct. So we used to write by depreciation account. Correct. 15,000. But I told you that whenever there will be provision for depreciation account, this entry will go over to provision for depreciation account. See, by depreciation account 15,000. Okay. So nothing more has to be charged. So it will close at here, and this will remain 1 lakh. Correct. Now we move on to the next year. There is a purchase of 1.5 lakh on 1st of July 2012. So we'll add it over here. Okay. And again, 1 lakh depreciation full and 1,50,000 depreciation for 6 months. So it will be July, August, September, October, November, December. So 6 months. So 6 months on 1.5 lakh and full 15% on 1 lakh. See, 15,000 plus 11,200. Okay, you'll write it over here. So nothing has to be done. Only the depreciation entries will be passing from provision for depreciation account. Correct. But our point of discussion is, see, where it is selling on 31st 12 2030. It is selling it for 50,000. So see, the machinery on the machinery account was always located on its, or always written on its original cost. Correct. But we'll remove it from its original cost only of 1 lakh rupees. See, 31st 12 2013 machinery disposal account. That means in machinery disposal account on 31st 12 2013, a machinery account will be shown of 1 lakh rupees. Correct? Now it is sold on 31st. It is sold on 31st 12 2013. Correct? So a depreciation will be there for the whole year. Correct? But there were depreciation in the previous year as well. See, this one, this 15,000 plus this 15,000 was related to that machinery. Correct. So both this depreciation has to be transferred to the machinery disposal account. Now see, provision for depreciation 30,000. It is 15K plus 15K. Correct. And in the year of sale, again, it has been used for the whole year. So 15% again. Okay. And the bank account means it is nothing but it is the sale entry, 50,000. Okay. Now tally this 1 lakh plus this, we'll find that they are incurring a loss of 5,000. So that is shown in the machinery disposal account. Okay. Was it confusing for you, or I shall write it and do it? Shall I prepare the account and will that be better for you? If you agree, then I can. I have no issues with that. Yes. If you say I can move on to, otherwise I have no worries. So what I'll do now, I'll do it by myself. I'll do it. Give me a second. Okay. So what we'll do the solution for it. Okay. So what are needed at first? Machinery account. Correct. Then we need provision, depreciation account, and then we'll go on to asset disposal account. Okay, I won't write up, I won't draw it. Okay, we'll do it like this. So what happened? So on 1st of 11, 1st of January 2000, a machinery was purchased, correct? So I can write 1/1/11 to bank account. Okay, and I'll write it M1 was for 1 lakh rupees, correct? Now what you used to do on 31st 12 2011, you used to write by depreciation, correct? So 15% straight line. So depreciation will be 1 lakh into 15% of 15,000. We used to write that. Now this is only the change is there whenever there will be provision for depreciation account, as I explained. So the same entry will be located in the provision for depreciation account. Okay. So what will happen over here? Here everything will remain same. 31st 12 2011. It will shown as by balance CD 1 lakh. It will be 1 lakh and it will be 1 lakh only. Okay. And nothing has to be done over here. So again, there will be a closing balance. correct? So the closing balance will be dated on 31st 12 2011 to balance PD of 15,000, and it will close over here, correct? So here what will be on 1st of Jan 2012, it will be to balance BD of 1 lakh, correct? Now see, on 1st of July 2012, a machinery was purchased. So what I'll do, 1st of July 2012 to bank account, and here I'll write M2 for how much amount? 1.5 lakh, 1,50,000, correct? So it will be 2,50,000. So it is a straight line, correct? So what, nothing more has to be calculated. So what we used to do, 31st 12 12 by depreciation account, we used to write, see, 15% on it because it is for full year. So it will be 15,000, correct? And this 1.5 lakh into 15% into 6 by 12 because it came into the month of July. So 6 months, that means 1,50,000 into 10, sorry, into 15, into 15% into 6 divided by 12. So 11,215, correct? 11,250. That means it will be of amount 26,250, correct? But we know provision for depreciation account is there. So what we will do, we'll transfer this figure to this year depreciation. Okay, so opening balance is over here. Sorry, it will be closing balance. Okay, it will be CD. So what we will do on, sorry, not 31st, it will be 1st. So on 1st of Jan 2012, we'll do opening entry by balance BD of 15,000, correct? It will close at 41,250, and it will be 31st 12 12. It will be to balance CD 41,250. It will close here. Okay. Now, so what we have to do a closing entry here as well. 31st 12 12 by balance CD 2,50,000, and it will close at 2,50,000. Okay. Now, similarly, there will be opening entry in the next year as well, because we have to do it for 31st 3/12 is there. A sale has been there, correct, at the end of the year. So you have to continue this year as well. 1st of Jan 2013, it will be to balance BD of 2,50,000. Anything more has been purchased or anything else? No, only a sale entry is there, correct? On 31st 12 2013. So see, is there any other other value which has been reflected? Means any depreciated value? No. So this M1 is being sold. So we know we have to transfer this to machinery disposal account. So what we'll do, 31st 12 13 will write by machinery disposal account of 1 lakh rupees only. Okay, and by balance CD next 1.5 lakh will be reflected as it is, correct? It will be reflected as it is. Now, see this, it is coming by machinery disposal account. So what it will be in the asset disposal account, it will be machinery account. Machinery account of how much amount? 1 lakh. Correct. And here what will happen? So let me draw opening entry. 1st Jan 2013. It is 41 to 50. Correct. Do not buy. Buy balance BD. Okay. And see all this depreciation which is there for this amount. Okay. For M1 machinery, this amount plus this amount has also to be transferred to the asset disposal account. Correct. Because whatever sale will be there, everything will be dealt in the machinery as asset, not asset, because it is machinery. So we'll write it machinery disposal account. Machinery disposal account. So this will also be transferred on 31st 12 13 to machinery disposal account. This 15,000 plus this 15,000. So 30,000. Correct. 30,000. Okay. Will be transferred to this. So what it will be written as? By provision for depreciation. By provision for depreciation. With the name of 30,000. And this asset is there for the whole year. Correct. So again, by depreciation account. For this year's depreciation, that is a 15,000. Correct. Then by bank because it is being sold. Sale for 50,000. Correct. Now, if you tally it, it is 1 lakh. Okay. So here it will come by profit and loss account. That is loss of 5,000 will be reflected and this will be closed. Okay. And yes, there. Here it will be again depreciation will be there for the M2 machine. Correct. Depreciation for M2 machine and that will be for the whole year. Correct. So it was 1,50,000 into 15%. So it will be 22,500. 22,500. And it will be closing over here. And it will come to balance CD of 12,000 and 22,000. So it will be 33,750. Okay, I've just done it roughly so that you at least understand that what actually happens when provision for depreciation and machinery disposal account is there. Okay, rest, there are few questions after this. Like, yes, see, illustration 22. Okay, it will be on your part to be done. Okay. Then this change of method, this change of method will be pending for now because when we'll move to AS10, we'll see this with AS10. Okay, this 23, okay, and 24, it will be done when we'll move to the AS part. Okay, and in the next session, we'll start with rectification of errors, provided that you're clear with it. And if you face any issue, then in the next session, at first we'll discuss that, and then we'll start with the rectification of errors. Okay, and regarding illustration 20, okay, try not to follow this one. Okay, just change it. Okay, change it into 1st of May 2013. Okay, and try to solve it in the, try to follow the way that I have shown it to you. This one for now, but yes, when time will come, I'll guide that way also, that what actually has been done over there. Okay, so that was all in the depreciation. Okay, but yes, there is few more left. Once we move on to AS10, okay, we'll fully decode it, what actually is happening and what has to be done. Okay, so we'll keep it up to here. So we'll see in the next session with a new chapter. Thank you, everybody. Have a nice day. Okay, so there is one another alternative. Okay, by the thought which in the book they have done it. Okay, like the illustration 20. Okay, now see, few minutes before some time only we did illustration 20. Okay, and I said that 1/5/2014 it cannot be. Okay, so how did we assumed it? We assumed it that we change it into 1/5, means 1st of May 2000. We did it 2013, correct? And then what we did, wherever it is written addition, we have assumed it at to be purchase. Okay, so what we have done in the question, addition, we have assumed addition is equal to purchase. Okay, and with that thought, we have done the whole illustration, correct? But there is one another viewpoint, how they have done in the book as well. Okay, I'll just explain it to you once so that if you see the book, you do not get confused. Okay, so 1/1/2014. See this one, 1/1/2014. Just change this date to 1/1/2011. Okay, and here wherever additions are written, na, now see what actually I'll do. I'll draw a statement of depreciation. Okay, and there I'll explain it what actually it has been done. Now machinery account and provision for the provision machinery account will be on your part to be done. Okay, I'm doing statement of depreciation. Okay, I'm doing statement of depreciation. So here is the, it will be the date, date. Here it will be particulars. Okay, here it is machinery 1, machinery 2, machinery 2, and along with that there will be okay. So machinery purchase on first 1/1/2011. I'll name it as AIM1. Okay, and then mm, where it is 17. See, then again it has written machinery purchase on 1/7/2012 costing. Okay, so no, sorry, not this one. This one. 1/7/2012, addition was made of amount of 40,000. Okay, so I'll name it as AIM2. Okay, and this one, machinery purchase of 20,000. Where it has been? This one, 1st of October 2013, 20,000. So these are the additions. That means these are the AIM2, AIM1, AIM3. Okay, so I'm writing here. It is for AIM1, it is for AIM2, and it is for AIM3. Okay. So now see when everything started on 1st of 2011. Sorry, 1st of Jan 2011. It was machinery was purchased for 80,000. Okay. So I can say purchase was made. Okay. Purchase was made for 80,000. Okay. Now see what actually they are saying. Then addition has been done on next year. Correct. So this year nothing has happened. So on 31st 12 2011, depreciation will be charged. Okay. Depreciation is 10%. Okay. And it will be for the whole year. Correct. So on 80,000, the depreciation will be 10%, will be 8,000. Okay. Why I'm writing it inside? I'll just, within a minute, I'll just explain it. Okay. So on 1st of Jan 2012, what is the WDV of the machine? It is purchase minus depreciation because it is diminishing balance. So the WDV is 72,000. Okay. Now, on 1st of July 2012, an addition has been made of 40,000. Correct? So that means again a purchase is there. Okay. Purchase is there of 40,000. 40,000. Okay. So now again, nothing has been done in the year. So what we'll do, we'll calculate the depreciation. Okay. Now how this depreciation will be calculated? 72,000 was the WDV of the M1. Correct? And this purchase is of M2. Correct? This is of M2. This purchase is of M1. Okay. Once I write it in their respective columns, you'll get it that what actually it is. So for this M1, the depreciation will be for full year on 72,000. You will agree to that? Correct. So 10% of 72,000 will be, okay. So for M1, the depreciation will be 7200. Okay. But for M2, what it will be? 40,000 into 10%, but only for six months. Correct. So 40,000 into 10%. July, August, September, October, November, December. Yes. Into 10, 40,000 into 10%. So it will be 2,000. Okay. It will be 2,000. Okay. Now see, again, nothing has been done in the year. Again, on 31st 3 2013, machinery purchased in 1/7 2012, costing 12,000, was sold for 11,000. Okay. So what I can say, on 1st of Jan 2013, what is the WDV? So WDV for M1 will be 72,000 minus 7,200. 72,000 minus 7,200. So for M1, it will be 64800. Okay. And for M2, what it will be? 70, 40,000 minus 2,000, that will be 38,000. 38,000. Now, nothing has been done in this year again. But on the last day, there is some sale. Okay. Now with this sale, now I'll divide the portions. Now I'll get the logic why actually divisions are to be done. But why, by what assumptions they are doing. So 31st of December 2013, again depreciation will be provided. Okay. So for M1, it will be 64,800 into 10%, it will be 6,480. Okay. And for M2, 38,000 into 10%, that means 3800. Correct. But see what they have written. Read this line carefully. See, on 31st 3 2013, machinery purchase on 1st of July 2012 costing 12,000 was sold for 11,000. Okay, sorry, it is 31st 3. So right now, no depreciation will be there for M1. Okay. See what they are saying on 31st 3 2030 means the date is 31st 3 2030. Machinery purchase of 1st July 2012. Now see what actually was the cost of the machinery that was purchased on 1st July. It was of 40,000. Correct. But they're saying that purchased on 1/7/2000 costing 12,000 was sold for 11,000. How it can be? Don't you think like, अरे 40,000 का machinery 12,000 कैसे हो सकता? So what actually they have done? See, I'm coming to M2 now. So this is the 40,000. Okay, this is the 40,000. Now this 40,000 में से एक part है machine का. Okay, they are assuming that machines are of different parts. Okay, and here the sale are of different parts of the machine. Okay, they're assuming it like this. Now say for an example, okay, now if I try to what I can do, okay, this 40,000, okay, this is a M2 figure. Okay, it was costing rupees 40,000. I'll write it, otherwise I will have some issue after it. Okay. Now, if as at first don't do the divisions, 40,000 was the cost. Okay, and it is depreciation for 6 months at the rate of 10%. 40,000 into 10% is 4,000. Okay, into 6 divided by 12, it's 2,000. So 38,000 is the value remaining. Okay, 38,000 is the value remaining, and they are saying that among this 30 to 38,000, okay, now what actually you have to do? Now you have to calculate depreciation for M2 for 3 months, because some part of it is being sold. Okay, so 38,000 into 10% into 3 divided by 12, it will be 950. Okay, 950 is the amount of depreciation that will be available. Okay, this is what we do with our regular assumption. Okay, this is what we do with our regular assumption. But if I split this 40,000, if I split this 40,000, okay, it is purchased in 1st of 7 into 28,000 and 12,000. So now see what actually will happen. This depreciation will also be transferred. Correct? This depreciation of M2 will also be transferred of 2,000. It will transfer, so 1,400 and 600. 1,400 and 600. Correct? So what will be the WDB that will be left? So from 28,000, if we deduct 1,400, it will be 26,600. Okay, and here it will be 11,400. Okay, now this is the part of the machinery. See, costing 12,000. They said na costing rupees 12,000. That means from this 40,000, there was another part of 12,000 which has been sold. So what we do at the beginning, whenever we purchase, we separated the parts. We kept the 20,000, 28,000 at a different and 12,000 different, because this 12,000 is which is being sold on 31st 3 2013. You are getting my point? What I did? they're saying that what was costing for 12,000 on 1st of June 2012. So that means when the machine was purchased, there was two parts of it. One was of 12,000 that is being sold, and what was of 28,000 which is not yet being sold. That's why they have said 40,000 का मशीन एक ही साल बाद, ठीक है, एक साल भी नहीं हुआ उसके बाद ही 12,000 का बेच रहा है. तो ये सोचने में इम्पॉसिबल लगता है कैसे बेच सकते. इसलिए ऐसा एज्यूम है कि ये मशीनरी का दो पार्ट, एक 28,000 का है और एक 12,000 का है, जो जाके एक साल के अंदर बिक जा रहा है. इसलिए अलग अलग कैलकुलेशन हो रहा है. तो ये बताइए मुझे, जब सिर्फ ये वाला 12,000 वाला पार्ट बिक रहा है, व्हेन ओनली 12,000 पार्ट इज बीइंग सोल्ड, तो 31st 3 2013 को डिप्रिसिएशन क्या इस पे भी दूं? शैल आई चार्ज डिप्रिसिएशन ऑन दिस ऑल्सो और ओनली दिस पार्ट, बिकॉज इट इज बीइंग सोल्ड. डिप्रिसिएशन सिर्फ इस पे पड़ेगा. Okay, so here depreciation will be 1400 into 10% for 3 months. 11400 into 10% into 3 divided by 12. So it will be 285. 285. So what it is coming? 285. 11115. Okay. Now what is the sale value? They're selling it for 11,000. Okay. So I can say that 31st 3/2013 WDV for M2, that is 12,001. Okay, part of that is 11,115. Okay, and on the same date, it is being sold for 11,000. That means 115 is what is my loss on sale. This 115 is my loss on sale. समझ में आया क्या हुआ संजना?
Yes, sir.
Okay. So similarly, now you'll see that for machine one, what they have said. So we have done this date on. We have changed it 1st of 11, 1st of Jan 2011, costing 32,000. But see, first we have purchased it for 80,000. That means this 80,000 has two parts. One part is of 32,000. So what is the left? 32, 80 means 48,000. Correct. So similarly, this depreciation will also be changed. Okay, now we'll do this as per the figures. So it will be 48,000, 10% will be 4,800. 4,800 and 32,000 will be 3,200. Let's see what will be WDB left. WDB left will be 43,200. Okay, and 28,800. Okay, now whatever purchase has been done, that will be written in M2, so not of our part. But yes, WDB of M1 will be, for the next year, again, depreciation will be charged of 7,200. Correct? But now separately, for each of the machines separately. So 43,200 into 10% will be 4,320 and 2,880. Okay. This is the depreciation which is charged. So WDV for the next year will be, WDV for next year will be 64,800 only in total, but it will be divided. So the WDV will be, the WDV will be 38,880. Here it will be 25,920. Correct? Now see, when it is being sold, you will see that on, see this, on 30 June 2013, machinery purchased on 1st of Jan 2011, costing 32,000 was sold for 26,700. That means I can say 31st 6 2013 is what This M1 part has been sold, correct? So you have to calculate depreciation for M1 32,000 part, correct? So 25, sorry, 25, 9, 20 it was, I think. Let me check once. Yes, 920 it was. Everything this is of M3, okay? Sorry, how M3 will come over here? M2, M2 which has been sold, okay? So there is no part for them, no part, but this 32,000, okay? For this, the depreciation will be for 6 months, correct? So 10% of 6 months, 1296. 1296 is the depreciation. So what is the WDV on this date? WDV for M1 for 32,000 part will be 24,624. Okay. Now what is for what amount it is being sold for? It is being sold for 26,700. 26,700. Okay. So definitely we are having some profit on sale. So profit is 2076. Okay. But yes, now see, anything more has been done. Yes, on 1st of October, the additions were made to the amount of 20,000. Okay. Now this will be considered as separate machine. So first, extremely sorry. Excuse me. 1st of October 2013, again some purchase was made. Okay. Now this will be M3. Okay. Of 20,000. This will remain as it is because question haven't gone far that which part has been sold for what. Okay. So now 31st, 2013, depreciation will be calculated. Now see where depreciation will be there. Depreciation will be there for 48,000 part, for 28,000 part, and 20,000 part because the rest are sold. Correct. So depreciation for M1 will be, now see 38,880 will be full year depreciation. For this, it will be 3,888. Okay. Okay. So for 26,000 as well, there will be full year of depreciation, that is 2,660. Okay. But for this 20,000, it will be only for 2 months. Okay. 10%, 2,000, 2 months. 500 is the depreciation. So here the value will be 34,992. Here the value will be 23,940. And here the value will be 19,800. Okay, this is how they have done it in the book, and with this date you have to reflect in the machinery account. Is that clear?
Yes, sir.
Okay, but now when you know that how actually it is being done, if the same comes, follow this way. But if you follow the other way as well, which I have given with the assumption that we have taken, because we have changed the date of 1/1/2014 to 1/5/2013, correct? So we have made it another purchase. Okay. So that is how it has been done in the book. Now machinery account you can easily prepare. Okay.